Hello everyone, today's video will be about how to explain a refinance set of documents. In this case, Chicago Title Company of Washington is a title and escrow company, and the bank is Evergreen Money Source Mortgage Company. So the first thing, as I had explained it in my purchase loan documents explanation video, I usually pull out the settlement statement and the closing disclosure, and I set it in front of the clients as I log their IDs into my notary journal so they can review it. And then I ask them if they have any questions. If they do not, then I still ask them if they would still like me to go over the closing costs with them and the loan terms. And if they say yes quickly, and then I would go over it for the purpose of this video, I will. But if they don't, I just tell them, hey, you make my job easy, and I just point them where to sign if they are comfortable signing. But in this case, let's go over it. That is the total loan amount. These are the points that the buyers had paid, 2.375% of the loan amount to buy their interest rate down. Or you can just tell them that's just what the lender is charging you to loan you the money. $695 is for the processing fee, as it says, tax-related service fee, underwriting fees. These are all the loan or lender charges, appraisal that they had done, credit reports that they've ran in order to qualify them, electronic delivery fee through SnapDocs, flood certification to determine that the property is not located in the flood zone. Prepaid daily interest is on the new loan from when they take possession, or I apologize, this is a refinance, so from when the loan funds. In this case is the 6th of March, and they were signing on the March 2nd. In a primary residence refinance, there's a 3-day right of rescission that they had to wait 3 business days before the loan would fund and the new one would take over and the existing one would get paid off. So that is the prepaid daily interest for the remainder of March, but their next payment is not due until May, because when they make a May payment, interest portion is paid 1 month in arrears, which will pay for April, and the prepaid interest was paid through the end of March. That's how they end up skipping a month. This is a reserve account with a lender for their taxes and insurance. In this case, 7 months of taxes at $130.48 per month, and 2 months worth of, I apologize, 7 months of insurance and 2 months of property taxes going forward. Aggregate adjustment, lender withheld a little bit too much, so they gave him credit back towards it. Following are title charges, which are escrow fee, lender's title insurance policy, e-recording fee, government recording charges of all of their documents with the county, and in this case, they are paying Arvest Central Mortgage. So with this refinance, they will pay off their existing loan. In this case, I asked them if they had an escrow account, meaning that were their taxes and insurance included in their monthly payment. If they were, whatever they had left over in their escrow account, their current lender, in this case, Arvest Central Mortgage, will mail them a refund check directly from them. Since they are refinancing within a couple of months when taxes are due, you will run into that scenario within a couple of months of end of April, or within a couple of months of at the end of October. A lender usually have them pay their taxes through the transaction. So in this case, the property taxes that are due at the end of April are being paid through this transaction, and whatever they had left over in their current escrow account, which presumably is this much plus whatever's for the insurance, they will get back from their current lender. Mobile notary fee, it is only there if you go out to their house or meet them at the place of business, Starbucks or whatnot. If they come into any of the title and escrow, Chicago title and escrow offices, you are more than welcome to cross it out, because they will not get charged, they meaning the borrowers, but you as a notary will still get paid, of course. And that equals new loan amount plus the aggregate adjustment minus all the closing costs equals balance due to borrower, meaning they're taking cash out. And they will fill out the disbursement form how they wish to receive those funds. And then the second page, I compare it, make sure the cash to close matches the lender's cash to close, and the rest of the numbers are identical to the penny. These closing costs that I've gone over with them are title and escrow company format, and this is the lender's format. So the closing costs that I've gone over are these, which are, as I had mentioned in explanation of purchase documents, closing costs breakdown on the lender's format is on the second page of the closing disclosure. But just to reiterate, this is their new loan amount, interest rate, principal and interest payment, which is down here. Taxes and insurance, in this case, are included in the monthly payment, equals their total monthly due starting in May. And there is no prepayment penalty. There is no balloon payment. And it's a 30-year fixed conventional rate. And the rest of the numbers are identical to the penny because they've already seen this. And I usually have them sign and date. However they start signing, if they start signing with the middle initial, please continue to keep the consistency going throughout. They can't go back and forth and enter in the middle initial and then no middle initial. If they enter it once, they have to enter it throughout the entire document set. That is a second set of the closing disclosure. Sometimes you will see 2 or 3 or sometimes even 4 sets of closing disclosure. It's there for a reason. I don't question it. I usually have them sign and date. This is the disbursement of proceeds of how they wish to receive that 19,000 what some odd dollars that they were receiving as a cash out. So if it's a wire transfer, have them complete that. The only 4 things that are required is the bank's name, routing number, account name is their names, and the account number. Or they can hold a check for pickup and call when check is ready, and they can pick it up at any of the offices of Chicago Title. Just say pick up at, and then write down Northgate, Seattle. This particular originated from Puyallup office. So if it's out of Puyallup office, you don't have to say Puyallup office. You can just say hold for pickup. But if they're picking up from any other offices, say at such office. And the funds will be in their account the next business day. Since this is closing on the 6th, so the funds will be the next business day. If the 6th is Friday, then it'll be there on Monday, unless Monday is a holiday, then the next business day. Sunday does not count in 3-day right of rescission format. They also sign and date. If you are signing them in any of the Chicago Title offices, have one of the assistants or the escrow officer fill this out, that they received the wiring instructions, date and time, and confirm by, they will sign it. This is just a payoff that escrow officer requested from their current lender. You can see when they had requested it, 2/11, since there's 15-day grace period within every month when they pay their mortgage. I usually ask them if they made a payment in February. If they have not made a payment in February, then let the escrow officer know to. If they have made a payment, then let the escrow officers know to update the payoff. If it's around the payment due date, any time between 1st and the 15th. And that's the payoff that they had requested. And whatever's left over in their escrow account with their current lender, they can see the amount on their payoff or on their statement, as a matter of fact, that they receive every month from their lender. It should say escrow balance. Closing escrow instructions, you will see these from every title and escrow company. In this case, it's Chicago Title. These just explain the whole process that they've already gone through and the role of Chicago Title during this transaction. On the second page, since it's a refinance of a primary residence, please have them initial, one for each borrower, or one if it's one borrower, to acknowledge the 3-day right of rescission or 3-day right to cancel notice, and then they have them sign and date and check that if they want the money deposited or wired into their account, which they had already filled out disbursement form. Fidelity National Financial Privacy Policy owns Chicago Title. This is just, you can thumb through that. Everything that they do not need to sign, you are more than welcome to thumb through. You will receive this borrower's affidavit from some escrow officers with Chicago Title. It's just saying that the borrowers will receive 2 completed copies of a notice of right to cancel. Sometimes they sign one and you provide them with one. Sometimes they sign and you provide them with 2 as a receipt. So just have them sign and then you notarize it. Just the e-closings with. This is just an explanation that it may be a hybrid closing for the borrowers to e-sign if it's an e-closing, because from this lender, Evergreen Money Source, sometimes they do hybrid closings where borrowers e-sign half of their documents and the other half that need notary sections, they sign in front of you. That's for the closing agents, which are escrow officers. Escrow officers do everything according to the lender's instructions, which are these. These are the instructions to all the escrow officers. Nothing for the borrowers to sign, so you can just kind of thumb through those. Sometimes escrow officers take these out, so you don't even have to see them because there is no signature for the borrowers to acknowledge. It just kind of speeds up the process if you just kind of thumb through it. And we got to the promissory note. I usually have them verify this is the address that you are refinancing. You promise to pay this amount to Evergreen Money Source at this interest rate. Payments are due first day of each month beginning in May. Last one, 30 years later. That's where they get processed out of. That's the only portion of the payment that's fixed, which is the principal and interest amount to the bank, because the bank cannot contractually bind the borrowers to taxes and insurance because they change every year as property increases. Therefore, the taxes go up and borrowers have a right to switch their insurance, property insurance, if they find it cheaper elsewhere. So principal and interest is the only thing that is fixed. Borrowers have a right to prepay their loan at any time, as much as they want, as many times as they want. And every month they have a 15-day grace period to pay their mortgage, basically due on the 1st, late on the 16th every month. If they pay 5%, if they pay after the 15th, the lender will charge them 5% late payment fee of their principal and interest amount. But lender doesn't report them late to the credit bureaus until they are actually 30 days late. And the rest is the same for everybody else. It's a multi-state fixed rate note, single Fannie Mae uniform instrument. So they just sign. So notice this one doesn't have a date, so please don't have the borrowers date it. It's very important. If it just says seal, they seal it with their signature. It doesn't mean that you have to stamp it. It's not for you as a notary. Deed of trust, as I had explained on purchased documents explanation video, this is a security instrument for the lender that's collateralized by the promissory note for the amount of money that they are borrowing against their property. So if they ever default on their mortgage, this is the lender's instrument of recourse to get their investment back. They stop paying, the lender will start foreclosing. So I always make sure that their names are spelled correctly under borrower section. I just point out that who the lender is, trustee in case of a foreclosure that the lender chooses. That's the lien against their house when it'll be paid off on or before that date. In this case, there's only one additional rider or an addendum, which is a mortgage electronic registration system. They keep electronic copies of this deed of trust, and they also keep track if their loan gets sold, who it gets sold to. And I usually have them verify that is the correct mailing address or the property address that they are refinancing. And the rest of the 11 pages are uniform covenants that I usually tell them, I promise you, you will never have to read unless you do not plan on paying for your mortgage. It only applies in case of default. It's all written by attorneys for attorneys. And it used to be one page back in 1970s. And I believe I've gone over this deed of trust in detail, explaining it in a nutshell, what it says in my purchase video of explanation of the loan document. So please refer to that one. In this one, I'm just going to thumb through it until we get to the very last signature page, which it's a recording document, as I had mentioned in the explanation of the purchase loan documents. Please do not go into the margin. It's a 1-inch margin. The lender, or rather county, will kick it back or charge them extra $50. So have them sign and date, and you as a notary notarize. Please make sure that you circle they if there's two of them, or he or she. And just to point out, residing at just the city that you as a notary live in. Don't write down the full address. Thank you. That's the last page of the deed of trust, and the next 4 pages is the mortgage electronic registration. That's the addendum that I had pointed out. They keep electronic copies of the deed of trust, and they keep track if their loan ever gets sold, who it gets sold to, because during a subprime lending debacle, lots of deeds were getting lost, or promissory notes. Deeds were never getting recorded, or promissory notes were getting lost. That's why MERS is a legal part of this transaction, and it gets recorded as an addendum. Also, anything with a rider means an addendum is a recording document, so please don't have them go into the margin. Sometimes one of the borrower is the only one on the loan. They'll be signing most of the documents, but this is a title paperwork, and if a spouse is on title, even if it's not on title and they are residing at the residence, according to this state laws, they have to acknowledge the title paperwork, community property state laws. This is a very important document to get right. This is their right to cancel. I believe it's federally mandated that borrowers get 3 business days right to cancel their loan. It only applies to primary residences. It does not apply to second homes or investment properties or any commercial refinances. But please make sure that they insert the date, or you can insert the date for them, but make sure they initialed the inserted date. And scroll down where it's usually under how to cancel section, after midnight of. Make sure that you count 3 business days after the signing date. Sundays don't count, and federal holidays don't count. So make sure that you pay attention to that. And sometimes the dates will be inserted there already, and they may be wrong. So pay attention to that. If it's a wrong date, please have them cross it out. Write down the correct date. If it's a correct month and just the wrong date, have them cross out the date itself, and then write down the correct date, and then have them initial it. And same with the end of right of rescission date. Unless it's a wrong month, let's say if it's the end of the month, then have them cross out the entire date and rewrite the date and a month and a year. And then please do not have them sign here, because that's if they wish to cancel. Have them sign down here and the date of the transaction when they're signing. Sometimes, people rush and they sign because they see their name, so they usually sign right above it. This notice of right to cancel usually comes with 2 or 3 copies. If it comes with 2 copies, I usually have them give them the copy that they messed up on, so you can submit back to escrow the clean copy of a notice of right to cancel if they started signing on I wish to cancel line. But if this comes with 3 copies total, have them sign 1 and leave them with 2 copies, and just bring back 1 filled out and signed back to escrow. If it only comes with 2 copies, have them sign 1 or fill 1 out and leave them with other spare copy. This is their loan application. That's the first thing that they filled out when they applied for the loan. They either did it online or over the phone with the loan officer. This is all the information that the loan officer or banker had gathered in order to qualify them, where they live, where they work, how much they make. They run their credit reports, populate all the debt into it, figure out their debt to income ratio for the bank to give them an estimate of what the bank can do for them. Loan application, loan estimate is derived from the loan application. So please make sure that you have them sign on the top as evidence of joint application. Even if it's only one applicant, you can see here where it says borrower's name. Have him or her sign on the upper left, even if it's only one applicant. That's their incomes. This column is for assets or bank accounts. This column is for liabilities or debts that was on their credit report. And the snapshot in time balances whenever the lender pulled their credit, those were the balances. Scheduled real estate owned, which is their home. This value of the market value is perhaps what the borrower thought or what the lender thought through Zillow, or if they had an appraisal done, that's where they would insert it and make sure that they sign above this X'd out section and date. That's their third page of the loan app. And the fourth page, sometimes it's clear, it's continuation of the liabilities and assets that didn't fit on the second page of the loan application. Make sure they sign and date at the bottom. Sometimes this page is blank, but since it's page 404, still have them sign. This is just demographic information about them, part of the loan application. It's the addendum to the loan application, one for each one of them, however they checked it. And affidavit of occupancy, it's self-explanatory. They intend to keep occupying it as their primary residence for at least a year. This is applicable because it's refinances only, so have them fill out when they actually acquire the property, an approximate date to the best of their knowledge, just a month and a year, and sign and date at the bottom. And then you notarize them. This I usually tell them is a colossal waste of paperwork. Every single payment over the lifetime of their loan, in this case is 30 years, therefore 360 payments. It's kind of interesting to see how much it goes towards the principal and how much it goes towards the interest. It's all front loaded and compounded. I usually tell them if they make one extra payment per year, principal and interest payment, the loan will get shaved down to 24.5 years. So it'll shave about 5.5 years off. But nobody stays in their homes anymore for the lifetime of the loan. So I'm not sure how beneficial that would be. And I usually thumb through that and make sure, sometimes they have them without signatures, but make sure if they do require signatures on the last page for them to sign it. Credit score disclosure, they've already done that. They give lender authorization to run their credit in order to qualify them, pull the credits from all three bureaus. In this case, each borrower signs their own. It's just a breakdown of their payment. That's their first payment letter, when it's due, reiteration of the loan amount, interest rate, there's no prepayment penalty, and who to make the payment to. They just sign and date. Temporary payment coupon, in case they don't get their statement in time, they can cut it out and mail it with a check. But I usually tell them, trust me, the lender wants your money, so you'll get statements. Just a hazard insurance endorsement letter that Evergreen Money Source is attaching themselves onto their homeowner's insurance policy as a loss payee. Self-explanatory, they've received a copy of the appraisal. They usually email it to them, or sometimes lenders mail a hard copy. In case they did not receive it, just tell them to follow up with the lender and have the lender email it to them. They still have to sign it. Signature affidavit, I usually tell them this is, you are who you say you are. So signature and date, and since the lender doesn't believe you, I crack a joke and I say I'll notarize it. And these are usually variations of their names that the lender had gotten from their credit reports. one for each borrower. Nothing to sign here, just a tax record information sheet for their property taxes that will get paid by the lender if it's included in their monthly payments. Tangible net benefit disclosure is just a loan information, just a reiteration of their loan terms. But what's important is on the second page that they actually initial next to the applicable option. Have them read which option pertains to them as far as what is the reason for their refinance. Check it and initial next to the X'd out or checked box, and then sign and date at the bottom. I usually say you're entitled to counseling if you default on your mortgage. And I, of course, make a joke. You're more than welcome to use it. The only counseling that I would need if I can't pay my mortgage is, can you pay it for me? I don't need any therapy. Jokes aside, I don't mean, they mean financial counseling, how to budget their finances. Borrowers have already probably docu-signed this form. You give lender authorization to verify their Social Security number with Social Security Administration for mortgage services. I usually have them initial here, sign and date. This is sometimes blank. That's if it's other than 90 days. So I usually don't have them fill it out, just the initial sign and date, and each borrower will have their own authorization for the Social Security Administration to release Social Security number form. This is an IRS tax form, which they've probably docu-signed as well, where you give, or they give lender permission to request their tax transcripts from the IRS for the last 3 years in this case, which lender has already done, and the borrowers had already provided them with copies of the tax returns. So this is only for audit purposes of the lender. Make sure that box is checked. If only one name is, sometimes they have them both on this form with both socials. Make sure they both sign the form. And sometimes this form comes with each of their name on individual forms. So if it's 2 forms with each of their names, please have them sign each, only their form. Don't have them sign each other's form. Another IRS tax form, but this is for their benefit. W-9 form is for the mortgage interest reporting. So the lender will mail them out in the beginning of the following year. A tax form, it's called 1098, that shows how much mortgage interest borrowers have paid throughout the year, along with their property taxes and mortgage insurance if they have it. So they usually sign in the middle of the page and date, and make sure that box is checked if it's a individual. And you can thumb through these. These are just the instructions from the IRS regarding that form. Each one of them have their own W-9 form. Compliance agreement, every lender has it, so the loan is marketable. If the lender ever decides to sell their loan to an investor such as Fannie Mae, Freddie Mac, or Wells Fargo, Chase, Bank of America, whomever, lender can. Nothing would change for the borrowers except who they make the payment to. Every lender has this compliance agreement, even the ones that don't sell loans, in case borrowers default on their loan and the loan becomes outstanding, so they can lender can bundle it up with other bad loans and sell it off as bad debt. So, like I said, if the loan ever gets sold, nothing would change for the borrowers except who they make the payment to. They will get either email or mailed or both statement. It's going to say notice of transfer, current servicer, whoever they started a loan with, future servicer, whoever they're selling a loan to, and that's who they make set up an automatic payment or pay their mortgage from that point forward. Flood hazard determination, self-explanatory. The lender always does flood certifications on every single transaction to determine that the property is not located in the flood zone. If it is, the flood insurance will be part of their monthly payments, unless they live in a condo or a homeowners association takes care of that. Borrower certification and authorization. The borrowers had already signed this form with the lender, but here it is again where they sign it with wet signature, as they call it. It just gives lender authorization to verify borrower's income, place of employment, run tax transcripts, credit reports, everything that they've done so far in order to qualify them. Lender cannot discriminate against the borrowers, and that's the initial account disclosure. It's a reserve or an escrow account with the lender going forward. Starting in May, this much of their monthly payment, which is for taxes and insurance, they're called impounds, goes into the escrow account of the lenders. And when taxes become due twice a year in October and April, the lender will pay them, and hazard insurance is the property insurance. It gets paid once a year, and this reserve or escrow account with the lender gets reevaluated once a year based on the borrower's previous tax assessment. They sign to acknowledge and date, and this is one of the new forms, I believe, as of November or December of 2019, where you can explain it to them. Borrowers just give the lender consent to use their tax return that they had already provided them with in order to qualify them, which they've already done. Signature and date. And USA Patriot Act form is for you as a notary to fill out what you've used in order to qualify, in order to identify who the borrowers are. So pay attention. These forms, this is for the lender, but you fill it out. Pay attention. Sometimes it requires 2 pieces of ID. This one says only one form of verification is required. Make sure you check what you've identified them with, fill it out. And if a second piece of ID is required, these are acceptable second document list identifications. If I usually, my go-to is, so they don't dig through it, you can verify their social security number, and then I usually check that and fill out their social security number there, and I just say that I saw their social security card. And you sign, print your name as a notary, your title is a notary, and then the date. This is just certifying that you identified who they are. No stamp is required. One for each one of them. And the last piece is just, I just say, make sure your property address is correct, and check this box if your mailing address will be the same as the property address. And sign and date. It's just for evergreen, how to make the payments and evidence of property insurance, nothing to sign. And you can just thumb through that because there's nothing to sign. That's all part of the loan, property insurance information. That is the end. I usually tell them, refer back to the first page of the settlement statement. At that time, they were signing on the 1st. 3 days later is the 5th, and the loan gets funded the next business day, which is the 6th. On that date, the loan will fund, and if they're getting cash back, which in this case, they are receiving $19,000 cash back. Once they fill out the disbursement form, this money will be in their account the next business day, which in this case is the 7th if it's a business day. And the next payment is due May the 1st. And I usually congratulate them, and whatever's left over in their escrow account with their current lender, Arvest Central Mortgage, be on the lookout. You'll get a check from their current lender. Thank you very much for watching the video. I hope it helps for your future signings.